What is up, everybody? Steve here. Today, I'm going to talk about a video I came across. CNBC, they were interviewing the CEO of Coldwell Banker, Ryan Gorman. And I wanted to address this video because I think that a lot of people get their news from different outlets, and sometimes people get their news from one source. And unfortunately, based on this video, and I put the clip in the description down for you guys so you guys can watch it and make your own opinions as well. But basically, if you're doing your own research about the housing market and you watch this video, it's like, wow, you know what? You should go ahead and buy a house right away. It's almost like this guy, the CEO of Coldwell Banker, is pushing more FOMO into the market. And we're going to talk a little bit toward the end of my notes on this about why that is happening and why he would do that. And also, if you have other family members who are on the sidelines of buying or what, and they're getting their research from mainstream media like CNBC and this video that I put in the description below, then share this video so we can at least give two sides of the story and people aren't going in blind buying a house. Also, if you have any questions, be sure to drop them in the comments and I will do my best to get to those questions. So let's get into the video. So this guy, Ryan Gorman, CEO of Coldwell Banker, he goes on to say buyer demand is so very strong and fundamentally people are looking to upsize. They're looking for second homes because a lot of people are remotely working. Yeah, I mean, that is true to a certain extent. And I always say that it's very tough when I'm giving these updates for me to say anything on the macro level because real estate is microeconomics. So what's going in your market is very different from other markets. And I have a video that's going to hit on Sunday. So be sure you guys subscribe. And this is pertaining to one market specifically that has been an incredibly booming market that we're starting to see deep declines. And this is, again, one of the reasons why I'm making this video, because I think there's a lot of false bullshit information that the mainstream media and some of these CEOs that have, let's face it, things do not affect these guys. Inflation does not affect these guys. They really don't care to a certain extent the general public and what they're really going through. And he goes on to say, even with pressures of rates, so he says rates, but he doesn't talk about how interest rates have increased drastically and what that does for the overall expense, additional interest expense on those loans. He didn't really put anything because the guy that was interviewing him was like, what about, rates increasing? And he just says rates. So instead of diving a little bit into that, he didn't talk about how significant it is and how much more you're paying in interest than you were, say, 6 months to a year ago. So he asked a question. This is I forget the guy's name from CNBC. He asked, do you think prices need to come down or stabilize to keep payments a certain range? Now, listen to this closely. This guy's response. He said, long-term increases are not sustainable, but not to say pricing isn't appropriate today. I think it reflects fundamental demand and not building enough homes to meet the needs. And he estimates 5 to 6 million homes need to be built in order to meet demand. Now, I've done a lot of other research and even in our, I'm a real estate broker here in Southwest Florida. And I think that, based on my own research and everything else, I even did a sample community or sample segment of this pre-pandemic showing that we really didn't have a housing issue. So these guys are throwing out, and I think these numbers actually came from NAR, National Association of Realtors, which, I am part of in terms of being a realtor, but I think that there's a lot of misinformation that they're providing as well, because, and we'll talk more about it toward the end of this, but there's advantages for these CEOs and companies and even National Association of Realtors to keep this market going. He said, and then he goes on to say, we have a rapidly moving market and a high velocity market. So again, if you're just paying attention to CNBC or some of these other outlets and this is where you're getting your information from, and you watch this video, this guy Ryan Gorman, he is compelling. You're like, wow, you know what? I'm kind of sitting on the sidelines, but you know, he doesn't say the market's going down and high velocity, and he's using all these intense words to create that FOMO, and you don't want to miss out. Fear of missing out is the worst thing possible, right? And he goes on to say multiple offer situations are everywhere and high cash down. And I can tell you, even here in Southwest Florida, there's markets out here like Fort Myers, Cape Coral, Northport, Lehigh Acres that are more affordable housing, and they're single family homes in non-HOA communities. And this guy's saying high cash down, but I can tell you there's a lot of people that are doing the bare basic with FHA loans, 3.5% down, and limited reserves and everything else. So this, again, when he's saying this kind of stuff, it's rush out there and go buy a house. And then he goes on to say, for those of you who are thinking, I hope this means demand will go away and I can operate as a buyer in a more normalized marketplace, I wouldn't hold your breath. I'm just like, this is why I'm doing this live stream today, because I'm like, this guy is just full of shit, and he's just pushing people to go to the market. Now, the real estate market for this guy, it's a trickle up effect. Okay. So you got your home buyer, you got your home seller. Okay. And then you got your real estate agent, and that real estate agent is under a brokerage. Okay. And now that brokerage, let's say it's Coldwell Banker, the real estate agent makes a commission. They split, let's say it's a 50-50 split with Coldwell Banker, the franchisee. Coldwell Banker, as an independent franchise in a local area, takes, say, 50% or whatever it is. And then it trickles up to whatever the Coldwell Banker franchisee has to pay the franchisor. So it trickles up to the CEO and, shareholders or whoever else is invested in Coldwell Banker. And Coldwell Banker is owned by Realty. Realty owns Better Homes and Gardens, Century 21, Sotheby's, Corcoran Group, and some others. And I'm sure the message is the same for the CEOs and all these other companies. I would bet if we actually searched the internet and looked around and watched different prominent players within these entities, that they're all pushing the same message. Now, why? Why are they doing it? Because for every real estate transaction, they're getting paid. They're making money. And again, I'm a real estate broker. Like, our livelihood is helping people buy and sell real estate. And they don't want this wave to end. They are making so many sales that any kind of slowdown in growth is not good for their bottom line. So they're coming out on mainstream media and they're pushing the FOMO, and they're saying, get out there and go buy a house. It's a good time to do it. And even though interest rates, as of Mortgage Daily News today, they're 5.35%. And they started that video saying, back in my day, 5% is not high. Well, it is when you have prices of real estate as high as they are right now. Now, back in your day, dude, the house that you're bought, whatever it was, even if it was in the 80s at 18% interest, your house was not $400,000. It's probably $40,000. So there's a big difference there of saying back in my day, which I think is a bunch of bullshit. Here's where I have an issue with things, and I'm not saying, I'm not trying to be fear mongering or whatever in terms of the market crashing, but I can tell you that people do run into hardship. People do run into issues. People do run into situations where they have a death in the family, they have divorce, they have to relocate, they have a job that they have to take, or they got fired from their job, or their company closed down. And it happens. And if it happens and the value isn't there, that from what you owe to where you're going to sell it, including closing costs, people are going to have to come to the table with a check at closing to sell that property. Excuse me. Now, The problem with this is people are like, okay, it's going to cost me 20 grand out of my pocket to sell my house. I'm in a negative equity position because, again, there's closing costs associated with the sale of a house. And I've sat with these people in the last recession, and it's disturbing. I sat at tables where, people they're sitting there crying. They are losing everything. They're losing their house. They're losing their home. And I think it's just irresponsible for certain media outlets, certain CEOs to come out with this kind of information. And I'm gonna, anytime I see this, I'm gonna call it out. And again, if you guys could help share this video as well, I'd appreciate it, because I think a lot more people need to see what's going on. Now, again, I mentioned that there's a certain market that I talk about on Sunday. I think it's going to launch at like 6 or 7 o'clock on Sunday night. Be sure to check that out, because that's one of the fastest growing markets in the country. And it's, in my estimation, my opinion, it's going to be the fastest falling. And I think it's the start of one of the fastest rising and falling. And there's going to be other markets like it. So take a look at that video, because it's going to be important to see that, that's one market that got inflated and it will be deflated. And there's going to be other markets, including here in Florida, that are going to be affected by this. And, I know there's people out there, they're saying, there's still limited inventory in my market and everything else, multiple offers. Yes. But, again, everybody's markets are different. There's a lot of markets where new builders home sales have completely flattened. They have maybe one sale a month in some of these communities, and it is happening. And we're going to do more videos on that kind of stuff. So I think it's extremely important that people are, I did another video on should you buy or should you wait, and that was a video, but full of questions for you, because everybody's circumstance is different. The CEO of Coldwell Banker is not going to come out and say, here's some questions you need to ask yourself if you're in this market to buy. He's not going to do that. He's going to talk about the strong housing market and the velocity and multiple offers, and interest rates are still low. And unfortunately, it's, again, trickle up effect. Their goal is to make as much money for their bottom line as possible. And I don't think they really care who it hurts. And it's unfortunate. And I encourage you, if you guys are in the market to buy, look at what's going on in your market. Talk to multiple real estate agents, get their feel for it. A lot of real estate agents are now on YouTube as well, talking about their local markets. Do your research outside of mainstream media. You need the boots on the ground and learn from those agents what's really going on. Drive around as well. I'm going to be doing another video of a place called Lehigh Acres here locally. And I was out there the other day, and I was driving around, and I see houses with overgrown grass. I saw houses that were half built with overgrown grass, with roof trusses in the front yard. If you haven't heard of Lehigh Acres, mainstream media, when everything crashed to boost their headlines at the time, they were calling that area ground zero for their real estate crash, and that area got decimated. And at that time, there were vacant houses everywhere. But if you're in the market, drive around, see what's going on, talk to as many real estate agents, get on YouTube, see what their take is, see what they're saying. See what they're saying about the future of the market. And, my thing is it's got to be right for you and your family if you guys are in the market to purchase a house in this market, because values are really, really high. And, interest rates rose significantly, which is good because we need a more normalized market. We need more inventory to come to market, and that wasn't going to happen if interest rates remained at 2.5%. It's just not realistic. But I'm kind of shocked still as to certain markets, how people are still buying with listening to FOMO out there in the market, with interest rates where they're at. I mean, you're paying a lot more in interest. If you have any questions, let me see here. Julie Chanel, sorry if I'm butchering that. Once again, banksters are bordering on predatory lending. The average person can't afford these prices of homes. I agree. And another thing too is, thanks for that, Julie. People need to watch out for adjustable rate mortgages. I know that there's a lot of mortgage brokers and lenders pushing these right now because the interest rates are lower and it's kind of a teaser rate. So it might be a 3-year or 5-year. But after that 3-year or 5-year term, the interest rates will adjust. And let's say you're locked in at, say, 4%. Do you really think that it's going to remain at 4% 2 years from now? I mean, it could jump up to, I mean, I dealt with people in the last market where they were in it was called a negative amortization loan. And these were predatory loans. Literally, people were getting first mortgages and second mortgages. So they would have to come out of pocket with no money to get the deal done. And these, usually the second mortgages were, they would adjust usually in a 2-year period. So people would get these teaser rates at like 3%. And then when they opened up for adjustment, those 3% skyrocketed to literally double-digit interest rates, and people just got decimated. It wasn't that they didn't want to keep the houses because they were at that time basically in a negative equity position because values were coming down. It was they simply just couldn't afford it because these freaking rates just jumped up like crazy. So I appreciate that, Julie. Harris, average income person cannot afford these homes. We've been getting crushed with cash buyers every time we tried to get a home. Look, I know cash buyers are still out there and it's frustrating. Understand something too. These institutional investors, they're paying with cash, but they're in most cases leveraged. So it's going to be interesting times ahead when to see what their debt positions are with these bulk properties that they've been acquiring. So, are they taking short-term debt? Because with the Fed increasing rates, if they have short-term debt that's adjustable, their debt position is going to rise. And if rent rates start to deplete and come down, which I think that they are, okay, and that happened in that last market. We experienced it, especially with people they can't afford rent rates, so they're moving in with other people. They're moving in with family members. That's going to bring more supply to the market. So when rent rates come down and their debt position increases, I believe that they're going to either bundle these up and sell them to certain hedge funds or other funds or pension funds. Or, they might just start to liquidate onesie twosies on the market with the hopes not to flood the market. So who knows? Anyway, guys, don't rely on any one source for your information if you're buying or selling real estate. I try to do my best to really research as much as possible to give you kind of all sides of the story, what's going on. And if you guys can share this video out with anybody that really is a kind of a one mainstream media, like they only look at CNBC for their news or whatever the case is, share this video because I think that we need to get the word out and maybe save people from future foreclosure and future short sales. And if you guys got value out of this, I appreciate a thumbs up. My goal is to help out as many people as possible. So thank you very much for being here. And I will see you guys on the next video. It hits tomorrow, 6:00. And then definitely watch that one on Sunday at probably 6:30 on that one area that the housing market is going down in value quickly. Again, thanks for being here.